company that's in the headlines for a bit of news, and today we'll take a bit of a trip across the ditch. Fisher Paykel Healthcare boosting its final dividend slightly despite a flat year for revenues and profits. On the outlook, the company said the increase in transport and supply chain costs remains a headwind, but these have begun to ease. John Milroy from Ords, this is becoming a bit of a theme in reporting season updates, isn't it? The supply chain issues, the rising costs. What did you think of the Fisher Paykel release and the stock itself?
Yeah, I think you're right, David. It certainly has been something to be mentioned that most of the briefing throughout the course of the reporting season, more recently throughout the US reporting season too. And governments and businesses are trying to find ways to solve some of that. There does seem to be some sort of easing up of some of those constraints around the tightness of the shipping market, tightening of containers and the like. But back to Fisher Paykel Health, it's really a wonderful business and pretty good effort in what's been a very, very difficult year for everybody to come out again and have a decent number. It's certainly a stock you'd like to have in the portfolio. Like all these high quality healthcare stocks, they always trade a little bit expensive. But it's a terrific business, David, and I think you'd be very pleased to see it sitting in the portfolio.
Yeah, so have Ords got a buy on it at these levels, around the $32?
I think it's more a neutral hold here for us, David. Probably just because it's had such a great run, it's a little bit expensive.
Yeah. Ben Clark, gee, we're good at these big healthcare businesses, aren't we? Whether it be ResMed, Cochlear, CSL, Fisher Paykel, Ramsay. We produce some beauties in this sector.
We do, although the Kiwis would probably tell you that we shouldn't take all the credit for it.
Well, Credit House is Australian, and so is Russell Crowe, so they can be too.
Yeah, exactly. We'll take it. If they chose to list over here, then we've got a little bit in there. So
yeah.
I mean, this has just been an incredible success story, as John was saying earlier. It was actually once upon a time this little healthcare unit was part of Fisher Paykel Appliances, which we'd all probably be a lot more familiar with. Yep. And under its own steam, this company has actually sort of well overtaken the parent company before it got taken over. And it's an amazing business. I think when you look at the numbers that they've released today, you'd sort of look at it and think, oh, there wasn't really anything that special in it. What you got to remember is that last year was an absolute boom year for FPH. They are about 2/3 of their revenue comes from ventilators. And of course, we saw this massive surge around the world in demand for ventilators. And so the markets had this view that the profits are going to, pull back quite a way versus a very strong comp. And what we've seen today is that the pullback hasn't been nearly as severe as the market was anticipating, which is why you've seen this bit of a pop in the share price. So we own this stock. I'd have it as a buy. I think it's really consolidated for about 2 to 2.5 years now. It will take time to grow into its PE because it did have this bumper period. It's also been impacted on the sleep apnea side of the business, which it is a competitor with ResMed in parts. But it's a really innovative, really well-run company, and I think it's a good one to have in a portfolio as well.
Okay, all right. And that group, I remember talking to one of the panelists on the call a couple of months ago, saying that group of ResMed, Cochlear, CSL, Ramsay, Fisher Paykel, in any sort of pullback in the market, that's when you sort of start loading up on them and waiting for them, but it rarely happens.